Welcome to my channel. Did you know that 50% of capital gains is taxable? Generally, if you sell your property at a price more than cost, you have a capital gains. For example, if you bought Tesla shares at $200 per share and you sold it at $800, you have a capital gain of $600 per share. 50% of capital gains are taxable at your marginal tax rate. If you put your investments in a tax-free savings account, any dividends, capital gains, interest can remain tax-free. Your money can grow much faster.
Let's look at a simple example. Assume you bought 50 Tesla shares at $200 per share and you sold it at $800. You have a capital gain of $30,000 and 50% of this is taxable. This $15,000 of taxable capital gain will be added to your income and will be taxed at your marginal tax rate. Assume you're in Alberta and your marginal tax rate is 30.5%, federal and provincial combined. You have to pay income taxes of $4,575 on your taxable capital gains. On the other hand, if you put it in a tax-free savings account, you do not have to pay any income taxes on the capital gains. The tax-free savings account TFSA program began in 2009. Individuals who are 18 and older and who have a social insurance number can put money in their TFSA. Contributions to a TFSA are not deductible for income tax purposes. Any income earned in the account, such as investment income and capital gains, are generally tax-free, even when the money is withdrawn. A non-resident who has a valid social insurance number and who is 18 years of age or older is also eligible to contribute to TFSA. However, any contributions made while they are a non-resident will be subject to a 1% tax for each month the contribution stays in the account. The maximum amount that you can contribute to your TFSA is limited by your TFSA contribution room. The TFSA contribution room is the total of the TFSA dollar limit of the current year, plus any unused TFSA contribution room from previous years, plus any withdrawals made from the previous year. The TFSA dollar limit for 2021 is $6,000. If you have any unused contribution room from a previous year, it will automatically be added to the contribution room for the current year. At any time in the year, if you contribute more than your allowable TFSA contribution room, you will be considered to be over-contributing to your TFSA, and you will be subject to 1% tax for each month that the excess amount remains in your account. The TFSA contribution room will not accumulate for any year during which you are a non-resident throughout the entire year. You can find your TFSA contribution room online through the CRA My Account, or you can call the CRA to get this information. You can set up a TFSA through a financial institution, such as a bank. Your financial institution will advise you on the types of investment they can offer, such as saving accounts, guaranteed investment certificates, or mutual funds. These are just some examples. Talk to your financial institution to see what they offer. You may want to set up a self-directed plan if you prefer to build and manage your own investment. If you are considering this type of investment, you can talk to your financial institution. You can withdraw money from the TFSA at any time, for any reason, with no tax consequences. The timing of your withdrawal may depend on what you invest in. For example, non-redeemable GICs may not be withdrawn until maturity. Withdrawals were added to your TFSA contribution room at the beginning of the following year. Investment income and withdrawals are tax-free, which means they are not included in income for tax purposes. As a result, your TFSA will not affect your eligibility for government benefits and credits, such as the Canada Child Benefit, the Guaranteed Income Supplement, Old Age Security, or the GST/HST credit. Finally, you can contribute to TFSA even if you do not have any earned income. Investment income and capital gains within a TFSA are not taxed, so any capital losses generated in your TFSA cannot be used against taxable gains in your non-registered account. If you use your TFSA for regular, normal investments or savings, you should be okay even if you hold high-growth investments in your TFSA. However, if you are a full-time or part-time day trader or swing trader, and you have excessive trading activities within your TFSA, the CRA may argue that your investment gains are business income rather than investment income, and they can tax your TFSA at their discretion. In recent years, there have been cases that the CRA is going after investors who have hundreds of thousands of dollars in their TFSAs. If used effectively, both the TFSA and the Registered Retirement Savings Plan can provide significant tax savings. If you're interested in learning about RRSPs, please check out my video on RRSP. I've included the link in the description of this video. Thank you so much for watching. Please subscribe to my channel. Please note that the government can change the tax rules and regulations at any time. In the event of any discrepancies, please follow the information on the CRA website or documentation. The content of this video is intended to convey general information. It should not be relied upon as financial advice. All investments involve substantial risk of loss. Please get professional advice from your financial advisor.